Okay, let's unpack this. We're doing a quick deep dive into the crypto market outlook. We're pulling insights straight from the latest weekly report published, well, just this morning, November 10th, 2025, from Vantage Plus. Our goal here, pretty simple, give you the key fundamental drivers and the technical picture for the big four: Bitcoin, Ethereum, XRP, and Solana. But maybe before we jump into the specific charts, let's set the scene. Cryptos have been under some pressure lately. Why is that? Is it just noise or something more?
Well, it's fascinating, really, the whole crypto space and Bitcoin especially. It keeps acting less like its own thing and, more like a high beta tech stuff. Prices have been sliding largely because we've had that 3-month correction in global equities.
Right.
And the negative momentum. It's likely to continue if some key support levels don't hold up.
So what's the main thing to watch then?
The key dependency right now, if you're trying to figure this out, is actually the NASDAQ index.
Ah.
If that manages a sustained rise, it would probably give some fresh upside to crypto. But, and here's where it gets a bit mixed, Bitcoin is also tracking the gold price. And gold is pulling back right now. So you've got these conflicting signals creating some real short-term uncertainty.
That link to the NASDAQ, treating crypto like a tech play, that's really important context. Okay, let's drill into Bitcoin itself. Trading what? Around $101,777 right now. The report highlights it's sitting right on a critical technical spot. What's the deal with the 100,000?
Then that positive momentum we just mentioned, it could evaporate fast. And that opens the door to, well, lower price targets.
Okay, let's pivot to Ethereum. Trading at $3,396.28. The report mentions the monthly chart looks a bit worrying after ETH broke below $3,800. Why is that $3,800 mark so important?
Because it was strong support before. Breaking below it definitely puts the market in, let's say, uncertain territory.
Makes sense.
But look, it's still early November,
Yeah.
so there's a chance it could recover, claw its way back above $3,800, and regain some bullish momentum.
And if that recovery doesn't happen, where's the next floor?
Well, if the rally fails, you have to look quite a bit lower. The report points to a major support zone down around USD 2,600.
Wow, that's quite a drop.
It is. And critically, that $2,600 level lines up with the 50-moving average.
Ah, the medium-term trend line.
Exactly. So breaking that would signal a pretty serious disruption to the medium-term bullish trend.
Okay, a lot to watch there for ETH. Let's touch on a couple of key altcoins. XRP first, trading at $2.2772. The report hints at potential upside even though it's been falling. Seems a bit counterintuitive. What's the reasoning?
Yeah, the optimism, it really comes from the recent price action, the candlestick pattern.
Yeah.
There was a sharp spike down recently.
Okay.
What technical folks call a long wick to the downside. Often that means sellers tried to push it down, but buyers stepped in hard at those lower prices. A rejection, basically.
I see. So potential buying interests there. What needs to happen for that to turn into real momentum?
For fresh buying to really kick in, XRP needs to clear 2 hurdles. First, get above USD 2.50. The 50-moving average is sitting right there, acting as resistance.
Right.
Then it needs a solid push above the psychological $3 level. That would help confirm that the earlier rejection of lower prices wasn't just a blip.
Got it. 2 key levels for XRP. Finally, Solana. SOL is trading at $157.64. The analysis mentions a head and shoulders pattern. That usually doesn't sound good, does it?
Right.
What does that mean for SOL?
No, it typically doesn't. The head and shoulders is a classic bearish pattern. It often signals that an uptrend is running out of steam and a major reversal could be coming. Right now, the market is trading very close to what's called the neckline of that pattern. It's sort of the pattern's base, and it's around the USD $150 zero mark for SOL.
So $150 is the critical line in the sand.
Absolutely critical. If SOL breaks decisively below that $150 neckline, well, that could trigger a significant sell-off.
But it could also hold.
It could. Necklines can sometimes act as strong support, too. The only way the bias really shifts back to positive for Solana is if it manages to climb clearly above the USD 200.00 level.
Okay, so wrapping this up, what does this all mean for you, the learner, trying to make sense of this pretty choppy market? We've seen these key support zones getting tested, or at least closely watched, everywhere.
Yeah, and we pull back to that bigger picture again. The near-term direction for all of these cryptos seems highly dependent on those outside forces we mentioned.
The NASDAQ and gold. Exactly. Critical thinking here means you need to watch those macro correlations just as closely as you watch the technical chart levels, like $150 for SOL or $3,800 for ETH. Those macro trends are really driving trader confidence, or lack thereof, right now.
Which leaves us with a final, maybe Provocative thought. If that hoped-for positive momentum in equities, especially the Nasdaq, doesn't show up this winter,
Hmm?
how far down could things really go? If those next major support levels break like ETH's $2,600 or SOL's $150 neckline, how much further could this negative momentum carry before we see some kind of real capitulation? Something for you to think about as we move through November.